Our view is that even though earnings should remain relatively robust, they should decline a little bit, still staying positive. But margins have the potential to be squeezed by inflation staying higher on trend than we've seen pre-pandemic. So that doesn't mean that the Fed can't cut, but it probably means that we see higher troughs than we saw before. In that environment, companies that can remain innovative and productive and reduce costs are probably going to be the winners here. And there are also going to be losers. It might not be as easy as in, according to one Fed research paper, the 30 years to 2019, where the lobbying dollars really paid off and the decline in interest rates really helped. So we can't just rely on ever lower rates and ever lower tax bills. We're going to have to really rely on innovation and productivity by companies in order to see earnings growth going forward. It is possible, but it's probably going to be more of a stock picker's market than before, where identifying those firms that really can continue to at least hold, if not expand margins in a higher trend inflation environment, that's going to be very valuable to identify those names.
When we talk about sales growth, Naomi, everyone from, well, not everybody, but a lot of companies from Alibaba, Starbucks, L'Oreal have been sounding the alarm on the China demand story. We were talking about China just in the previous segment, and it seems like this sort of slower than expected recovery is having global ramifications. And I was just even reading the Fin Review in Australia this morning, who said that China's growth nightmare has just washed up on the ASX as well. How are you watching that? I mean, how much credence should we be giving to the sort of so-called China problem that's showing up in a lot of these reports?
So I think one area where we can probably focus, especially given the current goings-on around the world, including elections and including policy that's becoming more protectionist in many countries, what we're seeing now is a slight reversal in globalization, and that is proving expensive for some areas. And we also see some unintended consequences of the decline in Chinese demand. So even though we might not be going to the early 2000s world of ever more globalized revenues and investments, it does serve to remember that globalized companies are going to be hit by a slowdown in markets with huge demand, like China. So that might also translate to policy as well. Before we start getting overly protectionist, just think of where our revenues are coming from, where we expect our future revenues to come from, where we want growth to materialize from, and perhaps that can also help policy stay a little bit more balanced and maybe less inflationary going forward.